Now we come to the more exciting part. And the more exciting part is when we can know what things most people don't know in the market before it actually happens. You see this one down here. The most important one is these separation lines. This is just for information, stats. You can build your own models, check these numbers, write in your journal. How did this look when you were taking a trade? Take a screenshot or use the notes, add a screenshot, and so on. So let us forget this one for a moment. You can also remove the if you double click like this, and you can take off the tables here, or you can go to this one to the bottom and take off the dashboard. If that is distracting you, you shouldn't have it on a chart, right? This. And if you only want to see the dashboard, you can take away the show straight lines like this. And then that they won't disturb you, because when you enter a trade and you have this one on, and you see it's all by a sudden started compressing. They do that during retracement, of course. If you realize that this is actually changing your decisions in what you're doing and so on, take it off. Because if you are in a trade, you know what you should be doing, you know what you should be going, because you've been looking at the high time frame. Then take away the things that distract you. That's the only way to overcome emotional trading. Okay, so what we are going to do now, we're going to take a look how this market could have done well for us. We need to understand a few things. Here's a trend, here's a consolidation, and here's a trend. You can trade both. I prefer to trade these, but you can trade these, and I'm going to show you later example on how this is done. But let's take it from the very beginning. You see how when it crosses like this will happen, and this is not a good place to enter, as you can see, right? But when you have a cross, this is actually 1 a.m. in the morning for me, so it's basically around 7 p.m. Eastern, right? So if you are a US trader, you probably would be looking here. I would be most likely in bed, or at least, not online, right? When you see this separation here, what you're interested into is to make sure, this is just my way of doing it, this last high and this last low, they become important lines for me, right? Simply because I want to understand, okay, if this was the max volume it did before, the biggest separation, I want it to be at least equal or higher before I take a trade, right? As you can see, as soon as it goes here, that's also the breakout of this level here, right? So if you enter into a trade like this, trend, not trade, if you enter into a trend like this is a trend entry, right? What you want to make sure that you really want to see it's close to this line, and you don't care about this line. Why are you not caring about this line? Because you are buying Aussie dollar. That's what the chart says. Aussie is going up, yen going down. If it was the opposite, you would be buying yen, meaning you would be selling this chart, right? But it isn't. It's Aussie. So that's the one this is the one we should be looking into, right? So when we come up here to this level, this is a trend mo, right? What I would see here You may have a different approach. You should have your own approach, or you can use mine, of course, but it's better to have, if you do what you already do, but with this information tool, you can do much better trade, right? So when you see this here, when they are equal, what I see here, this is called a CT, or contraction box. There's a long middle candle. There's one to the left and one to the right inside of this one. Meaning traders are happy with this price range, right? This is just a small 50-minute chart, so this is 45 minutes, but that's 45 minutes. So what I will be waiting for here is either to this high to be taken out or this low, right? Since we are buying, also we want to have a break on the upside. When it comes like this is called an evidence candle. This is a full candle like this. This is as clean as you can get it, but it's enough that it closes its body above here. When that is happening, it tells me that now is time to enter this trend trade. And if you take a look what the volume down here has done, it is when this candle is done, there is done, it has also taken out the last high and the last low, or it did it here. But this one is the most important line, right? And this is the time that you will need to study to get experience in how to use this, okay? But this is an excellent contraction breakout, what we call CBO, simply because it done exactly what it should, and we know already that they have been building by Aussie. Every candle here is that they are putting in different chunks of lot sizes for buying, right? While people are buying and selling, so they will, as soon as you close a larger buy order here and there are sell volume, it will go down and so on, right? The normal things. So in this case, we have done a higher wave. We find the contraction. If we have a breakout of the contraction, all my rules is fulfilled for a trend trade. So what I will be doing here, I will put my stop not below this candle. I will put it below the lowest of these wicks here that are, because they say that this may be retested before it actually goes up. In this case, it's just fill this imbalance here, you see, between here and here. But that's not a guarantee. Therefore, we just enter up here, stop here, and go for whatever. 1, 2, 3, 4, 5, 6 times. As long as this one is doing what it should, you can stay in. So what is it doing as it should? Take notes or remember this part, because this will help you when you're trading. You see how this peak goes up, you do a retracement, a new peak happens. What you should keep track of is you think that this is a trend chart, and if it goes above this one and retrace, it can never retrace back to here. If you do that, you should get out of the market, or at least move your stop. Okay. So what we do, we take a look. This is very helpful when you are trend trading, right? You see this one here, it made a higher. This one is higher, but it's not significant. So I would look into it, but I would rather look at this one, right? So this move up here, see how volume is expanding, and this one is just weakening even more down to here. So when I come up to here and we come here, this candle, this tells me that we are now taking out the previous peak's retrace, like an A, B, C. So A, B, C, A, B, C. So if a new peak can take out the previous retrace peak here, there, this is a warning sign that it may reverse, but it may also just be a retracement for the next push up. But better be safe than sorry. And remember, when we were entering this one, like here, this will be a break-even trade here. So when we come to this situation, I'll say, okay, I'm ready to cut 50%. 50% if I want to set my stop loss at break even. Or you set when you come up here, see this, say, okay, there's a block of candles here. Set your stop here, right? And then you have a negative stop loss. You may take out 75%, because then if you hit your stop on this one, it was not a super good trade, you would at least end with profit. But you give it space to actually move down this block. It's far from every time you do that, and this is not a good so-called order block. It has a specific look and feel and design, which you probably know about already. And if you don't, you can learn more about it out there, because there are different views on this one. Anyway, so that's how you can use this King Equalizer. Seeing when I do a new peak, as long as it doesn't take out this retracement here, this one, or this one, or this one, right? Then you are staying in, okay? Simply because the volume is expanding and it's doing exactly what you want in your trade. So don't look at candlesticks, look at this one. Because candlesticks will fool you, try to fool you, because that's the idea with trading, trying to induce you to do the wrong things. And if you just exit here and then it runs right up, they have managed to trap you to make sure that you're not part of the big moves. Use this one, put the line here. If this is the latest peak, right? This one wouldn't be the retracement, because this is a double peak. I will use this one, right? When this one comes down, next time we need to break this one, else our risk zone will be here, right? So you can use a forward retracement, or you can use the last one from this peak here. As you do this, you will learn for your asset, for your trades, log it, take screenshots, take notes, and so on. That's the only way you can improve your trading, right? But this one is very helpful. When it's expanding, some trades, especially in high time frames, some trades will just keep going up, up, up. But we will have to remember that this isn't an oscillator. So even if it goes up here and then go down, price can still continue up. But this was just a bigger ABC wave trying to take out this one. It didn't manage to do that here, right? And as you see, when it goes higher, it doesn't take it out here, because there are two different volume situations, right? But this can help you to identify if you should stay in a trade or if you should protect it, take partial, and move your stop loss. Okay? This. Okay. So that's how you enter a trend trade, meaning the market is already in trend here, right? If you use engulf, if you use contraction, if you use ABC waves, like here from here to here will be 50%, you enter there, put your stop below the A. Remember, if it can't take out your A, it has to go your way, moving up like this. It's a good trade. This is a London session here, starting. Good trade, moves well. These are absolutely not London session pairs, but as you know, there is a worldwide market, so all pairs will move depending on other pairs and so on, right? Now we're coming to my favorite, because this is not my favorite, even though it can be a good trade. My favorite is when I see the volume expanding like this here. See, there's a big gap between these. While this one is moving, nothing is really happening here. So basically, what we're seeing right now, if you draw a box like this, then it goes lower there, go a little bit higher like there, right? This is consolidation, right? And during consolidation, this will be not useful at all, because it will go up, it will go down, it will go up. because what this one is telling you is that they are putting in positions for whatever coming. And if you didn't know that the Aussie was the one that they are buying here, or they are both buying and selling, of course, but more buys than sells, right? So when you come up here, you know that you should be focused on buy orders. And your buy orders should sit below the last low body, right? So in my situation, use the tools, use lines, use alerts. Because at one time, if we do the replay, at one time we were just sitting here. And you don't know what's really going on. Looking at this one, it won't help you because it won't show the Aussie's strongest, yen is weak, even though they are pretty good, separated already, right? Yen is apparently not doing well because it's losing against 5 of them, right? And this is the lows you see up here, win-loss. And Aussie is right now 3 of them are taking over, but it's a mixed signal, and because it's consolidation, right? And this one's a second option trade, Aussie yen buy, and say, oh, it's not any stars, it's not 3 stars. No, because they normally happens when the game is over. But it can also be a super strong trend, of course. But don't focus too much on this one, because that's what most people do out there, follow these currency strength meters. You have better knowledge, better understanding now, because you have learned a lot so far. Now what we're going to do, we're going to add the last indicator. Because remember, this is the Aussie is a base quote. It's the first letters here. That's the one we are going to trade. So we want to know, how does Aussie trade against all Aussie crosses? You can see that here. We want to know that. So we're going to add that one. So now you are informed trader without uncertainty in the market. That's the worst thing we can have. Because what you have now, you have the overall markets. How do they look? How do they go, and so on. This is information and stats that you can use for your journal, but not use for this, because you have much better tool here, because you know what's going on. Down here, this one, all these lines here is not very useful for us. This weak and strong, it can help, but what we're going to do, see this one, it looks pretty much the same. But what we want to do, because you see it says euro up here. We are not trading euro, we are trading Aussie. So we're going to change that to Aussie. Look at the dashboard, the lower dashboard now. It's going to change to Aussie pairs. This. Because that's the chart we are looking at. And like I said, when we did the templates, you can say this as template, but this one will reset back to the default. This one won't. It will show you the right lines. So this is the only one that you need to manually add or change every time you go. I mean, if you're only trading Aussie pairs, well, then you will always have Aussie. That's fine, right? So, and again, you can change your feeds. You also have the Dixie here that it shows you how it do against the dollar index, right? And down here you can change all the styles and so on. But this one shows strength lines. We don't need them, because what these strength lines show is all these assets. And if you really want to see a specific asset, you would have to go to style and learn which one of this that will be removed on the chart here, because this is a multi asset indicator, so we can have the name for them. It's just, if I take away this one, for example, it doesn't disappear on the dashboard. It's one of the lines that you don't see anymore, so on. You can, but it's better to use this one for lines and this one for these badges and how it's performing against all other assets. Because you will have to remember that even if Aussie is strong against yen, right? Is this just an Aussie yen thing, or is this an Aussie taking over against all other crosses? Then you need this indicator to define if is this pair really ready to run away yet. You see the consolidation we have, and you see it says weak, 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 weak. It says sell Aussie on any cross. That's not what we want, right? This is just, remember, this is information. And it says sell Aussie CAD, but it's an old one. If it's a fresh one, you could be looking at that pair, of course. But this one I added just to help you understand what's going on, so you get information about the markets, different crosses, so you don't need to have to switch too much, right? If you want to make it simple, you can look at this one, you can look at this one, but remember, then you are not trading in the best environment. The best environment happens when you understand the volume, the consolidations, and when it's time to enter. That's what we're coming to now. This. You also see down here, whoops, it's small numbers. It says how many lookbacks we have, what time frame we are on, and what asset it's actually reading, right? You can, of course, expand this to large. It's really small right now, but we don't have to see this one, right? And as you can see on this one as well, if it says this one, for example, week, it has been that for 23 candles, or the last 23 candles. Not every candle will be weak, but overall candles, it was weak. So if this number is high, it doesn't really mean that much. If it's fresh, like here 7, OCGBP right now is flat. It has been that for 7 candles. So this is how many candles, how many bars back in the history it has been doing this, right? So just because it says one thing, you also need to check when did this happen? Because if it says a week here, it may be the first candle, and then the other 22 may be trending and so on, or not trending, but they're moving up and down, right? Because it's a week. And you also see it here, what it says about Aussie strength right now. Okay, so this is a replay. This is consolidation, right? So let's move it. See when you do. When you do replay, it's moving on the dashboard, so you can do back testing like that and test if you see the right things and so on. That's very helpful, right? And now it says mixed USD driven, not Aussie dollar, right? That's information we want to know. US mode trade USD pairs, not Aussie crosses. When we were here, probably the US dollar was moving away. So that's a way for you to know that you may be watching the wrong pair for today, right now at least. Go to the US dollar instead and see what US dollar pairs, Euro US dollar, pound dollar, CAD dollar, yen dollar, and so on. Can you find a setup there instead? It's just to help you, because it's impossible for you to keep track of 28 pairs, right? Or at least 8 pairs plus 2 extra in the box up here. So these indicators are made for a trader to have like a pilot. He has his control panel. He knows the weather, how much throttle he has, if he's up in the air or still on the ground, right? So this can help you a lot to identify things. But it can also be distraction. If you say, oh, well, I'm going to buy Aussie dollar, I'm doing it here in the consolidation, I don't care, I know it's going to move up because all this volume here probably going to do the same length on the upside. If you don't know that, but the consolidation length is normally the length of the move up or down. But if you don't know if it's moving up or down, then it will be worth not a lot, because it will expand down and try to get you into sell and then to buy or versa. But now you know this was all buying Aussie. So what you want to know now is, okay, let's say when we come down to this one, or even further down, taking out this expansion, that's where I want to enter my buy order. That's my highest probability. It will of course not work every time, but when it works, you will have the best possible entry. So let us keep doing this. Say what week mixed. You see, we are still in consolidation. Yen is taking over for now. Very weak. Right there. Now, this is the first time we see one pair, also New Zealand dollar, going strong. It's apparently leading in the base quote strength right now. This is, and you see down here, it's telling you to sell Aussie. But we don't agree because we know better. We know it's consolidation. We have expanding up. We have expanding down. We are moving. So in my world, I would say, okay, we have taken out the low of the consolidation. The breakout trades are now trapped. Okay, now we get an engulf, a magic candle when the wick is longer than the previous wick, and it's engulf this. So for me, since I have something is happening right now in the internal Aussie group, right? At least one is strong, right? And you won't see 3-4 strong with getting the best entry. So you need to think right here. You already know what they are building up. Aussie buy positions, right? And this would be a perfect entry for me, right? The risk we have is this block here, but there is always risk. For me, it's this is a super clear signal. I will be entering after this one. I will see. Oh, okay. Do I have any wicks this week? I will probably protect this week. So my stop will be there. A small stop. Okay. Let's see what's happening. Now we know what's going to happen, right? It continue. Now also says strong. See that? Right? So if you want to wait, you can do that, but you're still in consolidation. But now it's showing you that it's strong enough to push. We have 3 Aussie pairs. This is information most traders don't have. 3 are strong, no one is weak, they are flat. But that's okay, because as long as it's strong, that means 3 Aussie pairs is driving the market for this one to go up, right? It's not only Aussie yen, it's these combined. I don't say this is easy to understand in the beginning, but you are an informed trader that get information that most traders don't have. This is why we create these tools, to help you to have less uncertainty when you're trading. So important, right? Now it's all flat because it just tested the top, but it couldn't close above. Okay, we know already it's going to use this volume to push, right? So all you do, and you see, as long as these are not crossing down, don't look at this one, because it will compress, it will expand, and so on. These are the levels what we care about. If it goes below this one, this low or this high, but this one will have a smaller distance between here, right? The separation. But as long as it doesn't cross, and even if it crosses and can take out the previous, let's say it was crossing here, and it can take out this one or this one, because they will be the last high and low. We are done with now looking at this one. Then we will not be afraid that yen will take over, because this can happen, but it's not likely, because all the volume here needs to push first. It may just be a big up move and then dump right down if this has crossed. There may be other pairs that is making this happening. So remember, trading is hard, but with the right information, you can take the right decisions, and you know the direction that you should focus in on. So let's keep on going here. Mixed. If you look at the lower dashboard, now we are strong again. Now we have 5 assets in the Aussie group that says strong. And it's also winning over the Dixie. Aussie dollar is above DXY. Okay? Is this the demo? You see that we have actually closed above here. This is where most traders enter when you could have entered here, because you have the knowledge now how to do this in a correct way, right? You know in what direction they are buying, which side they are buying or selling, because you have this one. Then you have this one. And now you are looking into how does Aussie do? Genuine Aussie dollar strength. Now it says buy Aussie dollar on any cross. Buy Aussie dollar New Zealand dollar. That's the best one to buy right now, but it's an old one, so we don't care. We are on Aussie yen because that's what we saw on the midnight or in the morning, right? And of course now everything says this because market is moving this way. But now you will probably be almost done with your percent for the day if you were using an educated entry, right? This is just information, but it's good information that can help you to decide, okay, look at these expansions. This is the last expansion. We do a new expansion. We want to take out the high or low before we enter, because we know that's what market do, because they want to have the people trapped here before they run away. They want to have people trapped here before they run down. But you see, it really didn't never closed above here, so it didn't fool anyone on the sell side yet, right? On the buy side. But they fooled them on the sell side. They trapped them here. We don't need to go that advanced, but that's how you should be thinking. Who are the market trapping right now? If you're here, no one is being trapped. This is consolidation. Trapped, right? So when you see that and you see this and you say, okay, I know it from here that this was going up. Let's see how far we can get to this, right? And all of a sudden, this happens. And if you were entering here, I don't know how many times your risk, if you take stop here, enter there, probably 10 times or so. And that's the only thing you care about. You don't care how far it's going, where it's going. You only care about how many times my risk can I have closed for the day. Have I reached my goal for the day? If it's 0.25, 0.50, if that's it, leave. Come back the next day or the next session, but preferably the next day. Just because you are winning, you're doing nothing more than what you should be doing as a trader. Remember that. The trader should be winning, but we can't win all the time. And if this was a loss, you either continue with this asset because you will learn as it happens. It was too tight stop loss. You didn't listen to this information. It may be another asset that works better for you and so on. Super important, right? And you see right now it says Aussie dollar. This is live market. Aussie dollar strongest, weakest. But yen is here, and it says weak, right? And the reason it says weak here, this information here is taken from yen strength here. So these two are helping each other, right? But you can use only this one because it will still show, because this one is built into this one, right? So these are the two tools that can help you. And when you don't need them, you click here and you see full chart. You click again here. If you only want to see this one, you can do that. And if you only want to see this one, double click there. This. And if you only want to see these two, then you need to expand them so you can compress the chart like this. It depends on where you are in your steps for entering a trade or defining things like that. This was the most advanced presentation so far. But as you trade this live, you learn what is important here and what is not. But you are an educated trader because you have information that you can't just get from a chart. All this buying here, it's not only green candles, right? But all this buying here was, I mean, if I was looking at this one, this could potentially be like a quasi pattern for a sell around this area, but you wouldn't sell because you know it's the Aussie that they are buying, and if they're buying more Aussie than yen, it can't go down, right? So the more experienced you are, the more information you have, each trade that you log and learn this, you will always have an edge, right? And you see down here, you have these background, green, red, like this. It's just showing you how much the divergence it is between these two, or this group here, sorry, this group. So when it says strong here, this is of course an easy way for you. So if you are in consolidation and you say this looks good, but I have the last batch was weak, and then it comes a strong one. In this trade, after this strong one here, right, you get the contraction here. Downside contraction. No, we want to have an upside there. This one, see that? That's the evidence candle again. So what you could do at close here, you can enter long, stop below that candle, and you would easily do 1 times, 2 times, and so on. And how far this one will go? Look at the daily chart or the H4 chart and look for long wicks, right? We're not going to learn that in this video, but look for long wicks on the daily. So if you're going up, you're looking for a situation where you have a bearish candle and a bullish candle, where the bullish candle has a higher wick. These are levels where market normally go to before they reverse, right? So write that down. Study the daily for the wicks. If you are buying, look for a bullish wick that has a higher wick than the bears on the left or right side. If you are selling, look for a bearish candle with the longest wick where you have a bullish candle on the left and right side. Mark them up, make a line, because then when you're trading on 50-minute, you know this is a very important level. And if you have it on the 4-hour or on the weekly as well, if they agree, then you will build your confidence in what you're doing, right? So again, remember, I traded Forex many years ago, but it doesn't really matter if it's many years ago, because I still have, this is just data, this is just information. You can take any market, do this. And the good thing is, with this one, while these names won't change, because they are fixed, but you can actually build your own strength meter here. Let's say you only put in all the gold, for example, XAU US dollar, XAU Aussie dollar, and so on. And let's say you find 6-7 of them. Then just make the same here, right? Like dollar, gold dollar, and you want to fill up all of these here. Like you have 8 gold US dollar, and then you have 8 gold Aussie dollar, and so on. So you can build your own strength meter, but the names here won't change. But the values here can tell you. Let's say all are strong. That means all gold is strong against all different currency pairs and so on. Just saying that you can. I don't say you have to. That's more advanced, and you need to really have some log how you have built that up and so on. But you can, right? So even if this is just for Forex right now, you can use it for NASDAQ, for US30, for just what others. Do you want to see all the index, for example? You can do this one. But we have other indicators for that, right? But you can do that. That's why I give you the option to. Otherwise, I would have taken away this one, because then we were using this one feed. But you can change this. And remember, when you change it, save it as a profile and don't click reset settings, because then you will have to do everything again, right? So you can actually make them your own. That was just an extra bonus, what you can do. But for us, we have seen that if we entered here, this was a good trade day, right? This trade happened 4 a.m. in the morning for me. That's 10 p.m. Eastern. Perfect for US traders or other traders around the world. 4 a.m. I was probably not really in my best shape at that time. Basically here is where I normally goes up, and in this situation say, well, I missed this one, but I take the next goal fair because it's still an acceptable stop loss for a potential lot of volumes. This is a long consolidation, and if this is the length it's going to go up, it doesn't mean it will, but it can, because that's a very common thing, how you measure it, measured Mo, right? And yeah, because we can't be here all the time, so or take another asset that is working better during London, New York, Asia session, and so on. Find your way. And remember, if you're also a trader, Euro trader, pound trader, and so on, build those profiles around those pairs, of course, right? We'll just take this one off there, right? So you see, right now it's not expanding a lot in volume, but it is expanding, as you can see. Now we're taking out all this one, right? And yeah, it's we don't know what's going to happen. We already know that if you come up here, if you have done this one and you have done your, let's say your take profit was there, right? And you have taken a partial of 50, now you're taking out then 40% and leave 10%. And you can have your stop here or below here, right? Because if this 10% goes into break even, you will have a small profit, right? Because you were entering here after this candle. So any stop above here is a break even positive. But if it runs away with your 10%, that 10% can pay you more than your entire position that you did based on your knowledge, your 1, 1, 1, 2, 1, 3. Never leave a winning market, but protect in a winning market so you can't lose. That's the key to success, right? So hopefully now you have a better understanding how you use the FX-based strength dashboard and the FX King Equalizer together with your market or your preferred time frame or whatever it is.